Well, at Oakmark, we don't consider ourselves experts at market timing. We think stocks are really cheap if you believe, as we do, that the economy is going to eventually recover, as will the PE multiples. And I do agree with what Jim said of the markets are not functioning especially well. It's difficult to sell things that you see when they're up. It's hard to buy things when they're down. But stocks are cheap. We think, as always, investors should take advantage of declining markets to rebalance portfolios, sell some of their bond holdings, buy some equity holdings, and make sure they're as exposed to this asset class as they want to be long term.
Is it possible to know, Bill, though, right now what is cheap when we just don't know what any of the metrics, the earnings, anything is going to be?
Well, I think this is why it's so important that investors differentiate between what are one-time occurrences and what are the changes in long-term estimates. Long-term changes, then you have to think about applying a PE multiple to those changes. If you're just talking about something that's a one-time hit, then obviously, the multiplier on that is just one. I think of a company that we really like today. We like a lot of the financials, but Ally Financial. I was on an interview a few weeks ago, and I was talking about how cheap the stock was at two-thirds of book value. It traded at one-third of book value yesterday. If you take the Fed's severely adverse stress test scenario, Ally could lose 1 year's worth of income, but it doesn't damage their capital base. And assuming the market recovers the following year, or the economy recovers, it wouldn't affect their long-term earnings. So you'd have maybe this stock's like a $12 stock. It's got a $30-some book value, and supposed to earn about $4 a share. They could lose those earnings if this lasts more than a quarter or two, but you have to think about the current slump lasting more than a year to think about it being more than a $4 hit to business value. And the stock's fallen $20 in the past month. So we think there are a lot of attractive values if, as I said, you believe the economy is eventually going to get better.
Or I guess, Bill, and I don't want to put words in your mouth, or if you believe that all these Fed programs, there are too many acronyms to list, but it's far bigger than 08 and 09, that those are going to backstop credit, loans, banks to the point where you don't really need to know some of these multiples. Would you be a buyer of a J.P. Morgan Chase, a Citigroup, a B of A?
We own Citi, we own B of A, we own Wells Fargo, we own a lot of the banks. We think the banks are very, very cheap. They're in much better shape than they were going into the last recession. And if I went through each stock name by name, the story would be very similar to Ally, that if you think we're dealing with something that could be a two-quarter recession, the banks maybe risk a year's worth of earnings, but not a significant dent into their capital.
How much is getting a stimulus plan signed and done going to matter to the equity markets longer term?
Well, I think clearly today you saw the market anticipating that that's going to happen. And, no company was designed to have zero revenue for an extended period of time. We clearly need help to get through however deep this, or not so much how deep the river is. We know it's a deep river. It's how wide the river is. And I think, there have been a lot of stories over the past couple of weeks about our healthcare workers in the country and how inspiring they are. I'm proud of the private sector's response, how the drug companies are dropping everything, trying to find a treatment or a vaccine. But it's been frustrating to watch the politicians in both parties who seem more focused on advancing long-term agendas or positioning themselves for upcoming elections than they are in trying to put a package together that revives the economy. It's important and it needs to get done quickly.
And on that note, I believe you are still a large holder, and were prior to this, of Regeneron.
We are a large holder of Regeneron. It's been one of the strongest stocks in the S&P 500, as everything else in our portfolio has been declining. I can't tell you what we've been doing, but it would be fair to think if we acted as we typically did that we've needed to trim that position a little bit. but it's a great business, and this has really shown the advantage that they have with their genetic coding and how far advanced they are. The CEO talks about their mice that are human equivalents, and just how much more quickly this can lead to them finding a cure or a vaccine for the coronavirus. We're thrilled to be investors in Regeneron.
All right, Bill Nygren looking out for the long term, where certainly value will be found over the course of the years to come. Bill, we appreciate it. Best to you and your family and all of your employees.